Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to rip through Twitter, see what people are talking about, look at the information that people are sharing. I definitely take into consideration a lot of these people's charting. They look at it from different perspectives, different time frames that maybe I would, and I think I actually get quite a bit of information strengthening the bull case for commodities. I'm not saying that we're not going to have a recession or anything like that, or we can't ride through some volatility. Never claimed that that was not going to happen. But the bull market's still here. We're in the middle of it. We've had the first wave. We've had the pullback for the second wave. We could be at the bottom of wave three. Maybe we have a little bit further to go. Tough to say. And then we're going to take off and keep going at some point. So let's dive in. Let's see what's going on in the markets, and I'm going to share my financial opinions as we go. If you want to follow me, it's @money_finance. If you want to join the website where we talk about individual companies and particular setups, we've been riding a couple of these setups with some pretty good gains. Not everything is perfect. I will say that. And you can join our community. You can get a discount using birthday. I think it's birthday. I'll put it in the description link below, the coupon code. All right, so scrolling down, he says, yikes, China is staring at outright deflation. Chinese consumer prices were flat from a year ago, while producer prices dropped a whopping 5.4% year on year. Moreover, a strong relationship exists between global earnings per share and Chinese producer prices. The latest PPI number does not bode well for earnings. All I'm going to say is this. The demographic in China does not support credit growth. It's actually declining. So I would expect that deflation is a possibility there because you don't have a larger demographic coming up and supporting home prices and credit expansion. So what you're seeing here is legit. Like it is full on possibility aligned with the demographic that isn't as large. So I agree. Like that is a possibility. Now, during this phase, certain companies, when this kind of, I'll say, stabilizes, certain companies they do very well in those types of conditions. Low inflation or zero inflation. Think of like a lot of technology companies that could do very well, and they're going to struggle to increase credit growth. There's still going to be demand for products. There's still going to be demand for all of these things. But what slows down is credit growth, and credit growth is inflation. That's where it comes from. That's why this is where Japan struggled. Their demographic was not growing. And when it doesn't grow, you get disinflation, low inflation, or actually deflation. I don't think they'll get deflation. They'll probably continue to stimulate and do all that stuff. They'll probably just go a long time without inflation, like large rates of inflation. Carl says, B of A, since 1980, peaks in the U.S. two-year yields have always been followed by a risk-off event within the next year or so. The full extent of damage is unknown until the peak in policy tightening is behind us. We are clearly not at that point yet. So we're continuing to tighten and tighten and tighten. When the two-year turns, you can see these turn and come back down, we get some sort of event, and that's what's in this light blue. We came back up, turned, some sort of event, turned, some sort of event, so on and so on. When is that turn? When is that event going to come? Difficult to say. A lot of these events were driven by the real estate market, but not all of the events. This event here in 2000 was not a real estate driven event. Most of the other events are. So it's really being driven by the demographic interacting with the real estate market. All right, so we got Nat Gas. Nat Gas Energy coming to life in that bull flag I showed last Thursday. I agree. Nat Gas down in this area, this is what this is called is you get a decline. Some people call it a stage one base or whatever you want to call it. It's a very, it's basing out, it's consolidating. So you get a falling wedge, you break out, you consolidate sideways. Now we've got some upward momentum in a flag pattern, which could be a continuation pattern to the upside. This could be natural gas putting in that bottoming pattern where we're going to come back up. We've got Silj, the miners. Anyone else watching junior silver miners? Guys, this guy's on point here. Silver miners are incredibly cheap. We've got a couple of setups here. All right. Says have popped the dotted blue moving average equivalent to the 20-day moving average, dotted green overhead. So we've got a couple of trend lines that he basically put in here. What do we do to those trend lines? And what do we have for the lows? If you look at the lows coming in, we have this low right here, came up. It was a pretty good move. We broke a couple of trend lines in that move. We broke this first trend line, the second trend line. We came back with smaller selling pressure through here. That's the setup. Right there is a good buy point. We also have all our ratios are screaming buys for Silj. All of them. Silj and the silver junior miners is probably one of the cheapest assets on the market. Just bar none, flat out the cheapest. Now, this is where you want to start looking. And you can accumulate down here real slow, get your sprinkle on, whatever you want to do. But this is where I start looking. This is where you might get a pullback or something. And then you start to accumulate your favorite silver junior mining companies. We could rock it here. Possible. I don't try to time it to the nth degree. Notice this is $9 here and $9.50. It's not a huge, gigantic, long-term, big picture view, but I do think silver junior miners is one spot that you should definitely be looking at. Now, the only thing I'll say about silver junior miners is no one's making money right now. The risk is the greatest when no one's making money, when everybody hates it, sentiment's in the toilet. And I think at some point, if you look here, we can see that we've got higher lows coming up and we're above the zero mark. I mean, now's the time to be looking. But this is where everybody hates it. And they're not making a lot of money. And that's generally when you buy commodity stocks, is when they don't make any money. Then when they make a whole bunch of money, that's time to start looking to hit the exits. It's opposite of what most people look for, return on equity and all these other, we'll call it financial metrics that people look at. This looks really good. With credit card balances soaring and interest rates on those cards skyrocketing, the average consumer will soon have no choice but to cut off spending or risk default. Even then, it's likely too late for many. So we've got cards and other revolving plans, all commercial banks. It's up there a ways. It's been moving. But if you notice, there isn't too much of declines except for this one here. And then we've had some sideways movement. But there's only been a few declines. This is just, they stopped the economy here. So I kind of have to discount that altogether. Coming over here, it says commercial bank interest rate on credit card plans, all accounts. And you can see the interest rate is skyrocketing. So this pair, this high consumer loan credit cards plus the interest rates going up like that, that's not a good mix. It's not a good mix. Some people are going to get caught with their pants down, and you know what happens there. No one likes looking at that stuff. So we've got JC here. He says, call for precious metals melt up. $3,000 gold, $60 silver by the end of this summer. Holy crap. Now that's a big move if that were to occur. I don't make predictions, but looks like David Hunter's really going for it here. He says, gold and silver to see parabolic melt up by end of summer. Contrarian macro advisors, David H. Contrarian is bullish on gold and silver. And he talks about $3,000 an ounce gold and $60 an ounce by the end of the summer. Wow. Maybe that's possible. The US dollar is as strong as it was at the turn of the century. Tons of people locked and loaded US stocks, all in on growth stocks too, just like in the year 2000. That episode gave way to not only emerging markets clobbering the US, but value clobbered growth. So here's 2000, 129.4. Emerging markets Emerging markets are winning when they go down and they lose when they go up. US stocks are winning. This is a ratio chart down here. We're back to that same spot. I do think that we're going to head lower. This also could be a Batman pattern where we head on lower. That's the US dollar real effective exchange rate. When that goes down, we're going to see emerging markets go down with it, which means emerging markets are going to be beating US stocks given that ratio. And that's exactly what I think is going to happen. Emerging markets and commodities are going to rip it. I'll just say that. Crash Bros, you okay? Home prices hit new highs driven by tighter supply. U.S. states with no state income tax. We got Texas, Alaska, Florida, Nevada, Wyoming, Tennessee, Washington, South Dakota, and New Hampshire. Would you live in any of these states? I don't know, guys. Some of these states have really high property taxes. Alaska is dark for the majority of the winter. I can't do that. Florida, I've been to Florida. I call that the swamp sack state because all you do is sweat the entire time. So that's a little warm. Nevada's warm, it's dry, but there are some areas in Nevada that aren't as warm up in the mountains. So potentially, Nevada also has cheaper property taxes. Wyoming's another good spot. It's just pretty desolate out there for the most part. Tennessee, a little warm down there. Washington, too expensive. Good, high property taxes too. South Dakota, yeah, maybe. And then New Hampshire. I've never been out there, so I can't say. Shabam ripping it, saying trust data, not narratives. This is light vehicle sales comparisons. 2022, 2023, year-to-date sales in millions. Whoa, whoa, whoa. I thought we were having these, crashes in car sales, but light vehicle sales at least going on higher, beating 2022. A lot of people are presuming what real estate and mortgage professionals are telling clients about buying a house today at today's mortgage rate. The good ones are saying that three things could happen. Number one, rates stay the same and nothing is gained nor lost. Number two, rates go up and you made a good decision buying now. Number three, rates go down and you can refinance. Dedicated industry professionals don't try to sell. Instead, they educate the consumer as to the possibilities and let them decide. Basically, you win in any direction of interest rates if you buy now. That's basically what they're saying. From an affordability standpoint, stocks seem itching to run, but the bond market has responded. Not so fast, with yields breaking out in both nominal and real terms. This chart of the 5-year is an eye-opener. How can equities break out while the rate environment is getting more hostile? So we've got this, we're breaking out to the upside. And again, I don't know if these rates are going to drop. They could continue higher. We could get a back test and then a rip to the upside. Maybe this is an overthrow upside where we rip it to the downside. We put in kind of this, a similar kind of Batman pattern or whatnot. But again, I don't know. I want to watch and see it. If I were looking at home prices and home sales volume, that's where the inflation comes from. I think interest rates have to stay high to slow that market down. If they were to lower rates, they're just going to blow up a housing bubble. It's going to be a big one too if they lower rates a substantial amount. So I think rates are going to have to stay high for a good long time. The historic deterioration in housing market affordability as told by one chart. It was a 1-2 punch, overheated house price growth in June 2022, followed by last year's mortgage rate shock, going from 3 to 7%. You can see that the mortgage rate component is gigantic here in terms of affordability. A positive figure means that the component improved, and then the negative going down is a worsened housing affordability. So the mortgage rate is really killing it here and is the majority of the affordability problem. Wifey says, Fed funds rate is going to 7%, and it will kill the markets and the economy. It will create the biggest depression in history, stage 4. Fed will cut rates aggressively, but it will be too late to stop the deflationary destruction. The Fed is more lagging than its data, the big one. I don't know if she's joking because The big one's not coming, in my opinion. You got to have a deleveraging event. No deleveraging event is coming in the short term, in my opinion. That would be after the housing market crashes, probably towards the end of this decade, maybe even early 2030s. So that's my opinion. We're a little bit different there. Grady killing it here. I love it. Silver miners have hugely underperformed both the metals plus gold miners lately. A massive revaluation of silver miners is coming. Life-changing money will be made during the next huge up leg. Be prepared. And guys, take those words to heart. This is a sector that is incredibly cheap. So he's got a SILJ to GDX ratio chart. GDX was the strongest of the two from here. Time for SILJ to outperform GDX when the metals bottom here. We've got kind of a little false breakdown here. We're starting to come up and we're ready to break to the upside where SILJ could outperform GDX. I'm ready for this, guys. I am ready for it. Let's rip this thing out of the bottom here. I've got my favorite individual companies, and I've got enough in there where I think it will make a difference. So that's what I've got for today, guys. That's what I'm seeing. The takeaway here, SILJ. SILJ is looking cheap. If you guys want individual companies, you can sign up to the website. That's where I talk about individual companies. Otherwise, SILJ, the ETF, maybe it'll do okay for you. If you guys like the content, give me a thumbs up, subscribe to the channel, subscribe to the website, and I do have a discount code running. I think it's Happy Birthday is the discount code. I'll put that in the description link so you guys can see it. All right, guys, that's all I've got. We'll catch you later. This is Finding Value.